Hey y'all, I'm Catherine Ross and I'm joined by Stephen Guilfoyle, Real Money contributor. We're going to break down what you need to know in the markets, oil, and of course Real Money stock of the day, Oracle. All right, so let's kick this off with, ahead of G20, what are you watching in the markets right now?
Well, I think G20 is what we have to watch. That and of course tensions with Iran. I mean, we saw the swoon in the market there when it looked like the president might opine on the situation, with how the market came in all the way basically to flat from last night's close. And when he kind of offered the Iranians a way out by saying maybe it was a loose cannon, the market figured, okay, we're probably not about to do anything crazy. And the market came back from that. As far as G20, this is the biggest negative overhang for the market. I mean, GDP, the future of global GDP almost depends on the United States and China coming to some kind of understanding. I don't think they can come to a realistic, thought out, comprehensive solution anytime soon. I think they might decide, hey, you need a break, I need a break. Let's come to some kind of limited deal that investors, the media, and algorithms will buy into and allow us to proceed from there. But I do think it is a risk, and I think that's why even on such a euphoric response to the Fed, we can't go all in.
So looking ahead to the weekend, is there anything worrying you as the week ends?
Well, I don't think you want to get caught you want to watch for overbought conditions in all your names. We have so many charts right now that are really positive. I mean, if I was just to obey my charts, I'd be long way too many names and way too many shares of the names I like. So I have to temper my enthusiasm, because there are going to be days leading up to the G20 next week, which the market will probably backtrack, where profit taking has to come in. The condition, there are a lot of charts that you'll see, especially this growth response in the industrial names and some of the tech names, where it's almost parabolic over the last few days. I mean, take a look at Shopify. What's it up? I think it's up 100 points since earnings in April, right? I mean, it's just an incredible response to the pricing in of, I guess, higher valuations. But I think you probably want to make sure, you want to maintain gold. I almost forgot to mention, kids, okay, you need exposure to gold. Gold, to say it's breaking out is an understatement, but you got to remember, it's also a response to the cheaper dollar, all right? So as I have always told you, you want 5% exposure to physical gold, and another up to 5%, I have it at 2.5% exposure to paper gold, either the futures or the ETF. But I think you want that 5 to 10% exposure to the space, because if anything goes wrong, gold. If the dollar gets cheaper, which the Fed is obviously trying to do, gold. Can it come in? Sure, but it is a safety valve.
You just said kids, so that made me think, if I'm a younger investor and I'm looking at gold, how do I get into it?
I got a guy. I do have a guy, but there's other guys. I won't force you into my guy. But yeah, you need to call an actual broker that deals in precious metals, and some of them have limits to how little you can put in. But my guy is especially nice. He will guide you to another guy if you're not in his class. But it is a space that is a little bit, you have to store it somewhere. You probably don't want to put it in a firebox under your bed, but there are vaults where you can keep it, and it's really in case the bad guys ever show up.
So let's talk about Real Money stock of the day, Oracle. I read your column earlier about Oracle where you said that you're not a huge fan of it. Can you explain that? I'm not
a fan of Oracle. I think the earnings were solid. I think they are transforming the firm into more of a cloud type corporation and maybe getting away from the legacy businesses. I like that they're teaming up with Microsoft to go after Amazon, but out of those three names, I like Microsoft, I like Amazon, and then I like Oracle. It's definitely my third choice. I wasn't ready to pay 57 this morning when I was writing the article. That's where it was trading. It's coming a little bit during the day. I'm okay at 55 to maybe bite into the apple for maybe an eighth of a position and see where it goes from there. But I do like that the name does pay a dividend, and that it's not volatile at all. If you look at the chart over a couple of years, you might not make a fortune, but there's not a lot of downside risk.
Sarge, looking at oil right now, how should investors be trading oil?
Well, oil's kind of going hand in hand with aerospace right now because of the situation in these Straits of Hormuz. I think you always want, regardless of where WTI or Brent is actually trading, you want some exposure to oil at all times, because almost all the real firms, the firms with good cash flows, pay some nice dividends. So you want exposure to production, even though production looks like it could suffer for a little bit, and because there's so much oil on top of the earth right now, I think you want exposure to refining, which is why I swapped out of my Exxon and into Valero, but I'm still holding British Petroleum, Royal Dutch, and Chevron.
All right, Sarge, thank you so much for joining us.
Oh, anytime.